So how should you position right now? We have with us Joseph Tanious, the chief investment strategist at Northern Trust Asset Management, which has more than $1 trillion in assets under management. Joe, thank you very much for being here with us. You heard Emily's report on what's happening with regard to the continuing resolution, getting something done to keep the government going. You heard the stuff out of the White House with regard to OMB and cutting funding for certain types of projects in certain locations. All of this is happening. How are the markets really at record highs right now, given all the uncertainty?
Yeah, I think there's a lot of noise, which is ultimately creating some volatility and obviously the uncertainty around the government shutdown and how this resolves itself, how long this is going to take until we can finally reach some agreement in Washington is clearly weighing on investors' minds. But at the end of the day, Dom, I think the underlying fundamentals are what's carrying markets and lifting them to these record levels that we continue to see.
I mean, we've talked about numerous times over the course of the past couple of weeks leading into this government shutdown, that if you look at the government shutdowns that we've seen over the past 20, 30 years, the markets largely, generally speaking, shrug them off because there's always a light at the end of the tunnel. You had mentioned that this time could be different slightly. What do you mean by that?
I think it could be slightly different in the sense of just where we are in terms of the economic cycle. And if you think about the Federal Reserve and just monetary policy, and that inflection point, if you will, moving more towards accommodative monetary policy as the Federal Reserve tries to decipher what's happening with the economy given the labor market. I think that creates a little bit of uncertainty around it. I think the longer we go without government data, official government data being released, again, creates a bit of anxiety. Now, as it relates to the labor market, there are other data points that we can look at to triangulate, if you will, what's going on with the economy. And I think everyone knows that the labor market is softening, and the Fed certainly knows that. But the longer this goes on, I think it certainly highlights, if you will, the political polarization that we have in Washington, and that can certainly erode investor confidence.
There's a strange irony at play here. The more uncertainty there is, the more certainty there will be of Fed interest rate cuts down the line. Is that a fair assessment? And what is your house view right now on interest rate cuts vis-a-vis the Fed, vis-a-vis the shutdown and the economy?
Yeah, I think the Fed, look, the Fed's, I don't envy them, clearly, right? Their dual mandate are clearly at odds with one another. You have the labor market on the one hand, which is continuing to soften, and on the other hand, you have inflationary pressures, which are likely to creep up a little bit higher in the months ahead as a result of these tariffs. Our view is that you are going to see a continuation of Fed rate cuts. Now, the cadence of which that comes, I think, remains to be seen, and we'll have to just wait and see, as it clearly is data dependent. But over the next 12 months, I wouldn't be surprised if you see the Fed funds rate about 100 basis points lower than where it is today.
Where exactly, then, would there be the most attractive parts of the market to you right now, based upon the good set of fundamentals that you alluded to earlier? What parts of the market should people be tilting more towards? And then which parts of the market should they be tilting more away from?
Yeah, I think when you look holistically at a balanced portfolio, which includes exposure to risk assets and defensive assets, meaning stocks and bonds, we continue to favor those risk assets. Most recently, we've added some exposure to the U.S. as we have more confidence around a soft landing here in the U.S. We think that economic growth is moderating in the months and the quarters ahead, but the odds of a recession, an outright recession, from our perspective, have come down. You also have some pretty meaningful earnings estimates coming forward into 2026. I think you just look at what happened last quarter, right? Companies basically doubled earnings estimates, and I think that trend is looking strong into the year ahead. You also have a meaningful amount of fiscal stimulus here in the United States. And then, of course, we can't have this conversation without talking about AI and just what that means.
Okay, so let's go.